Now, the millennials are the most influential group as both borrowers and lenders on peer-to-peer lending platforms, and young and tech-savvy Indians are well ahead of prior generations when it comes to borrowing or even using the platform to invest in a new asset class. Millennials have driven credit demand by a big margin in the last 2 years, and the majority of them have taken riskier, unsecured loans, which may cause concern for lenders. Unsecured loans, which include credit cards, personal loans, and consumer durable loans, account for 72% of millennials' credit needs, demonstrating increasing consumption-oriented tendencies. The aspirational class today wants to travel, go on exotic vacations, buy luxury products, and so on, and they are not afraid to take out loans for such personal necessities. In comparison, secured loans for two-wheelers and automobiles accounted for only 9% of millennials' credit appetite. Now, discussing this new tide of lenders and its impact on the fintech ecosystem, we have with us Mr. Suvendu Mahapatra, Senior Director, Lending Operations of Cognizant, who will also be moderating this panel. And Suvendu is joined on the panel by Mr. Anil Pinapala, Founder and Chief Executive Officer, Vivifi India Finance, Mr. Gaurav Jalan, Member of FACE and Founder and Chief Executive Officer of mPokket, Mr. Irfan Mohammed, Chief Business Officer and Financial Services with CredAvenue, and Mr. Ramgopal Subramani, Chief Operating Officer, Perfios. Over to you now, Suvendu. Panel is yours.
Thank you, Amit. I'm glad and very excited to be part of this forum. Right. So, millennial always become, it remains a very close subject to me. And when it comes to lending, nothing different. So, there are 400 million millennials in India. Right. They're young. They're dynamic. They kind of want to kind of explore, and the generation believes that they consume first, pay later, right? So they are the risk taker, as much as they want to kind of have everything fast, accurate, and in a simple way. So I'm going to kind of start the discussion. Have the question to all of you. Maybe you can introduce yourself and talk a little bit about your company when you kind of respond to the question. So, Irfan, maybe I'll start with you. You being here with me here, are the millennials different when it comes to the using credit? If yes, how different are they?
Thanks, Suvendu. First of all, thanks Fintech Festival organizing team for having us here. I am also equally glad that we are speaking on this topic. We are close to this particular subject and have been watching this space very, very closely, and then there is serious business that we are also doing on this particular thing. So, I welcome our fellow panelists also. Talking about the specific question that you asked, yes, we see serious demand here. He was also talking about the uptake that we have especially seen the last 4 to 5 years. With respect to the millennials taking credit and the kind of risk taking that you are talking about, consume now and then buy later, yes, obviously we exactly see the same kind of characteristics or consumer behavior on our platform, and at least 65 to 75% of our 65 to 75% of our business is on consumer lending, which has taken off versus the traditional lending that we are talking about, including mortgage to commercial vehicles to MSME, etc. But I am talking about personal lending per se. So they are different from perspective that there are companies who are also offering credit now, especially to millennials who are new to credit, and that also is propelling the amount of demand that we can see on the demand side.
Thank you, Irfan. I think you made a very good point, right? So majority of them are new to credit, with maybe no to kind of minimal credit history, and also the income history, right? So so I think that's a very interesting subject altogether, that how they kind of fit into all of the lending process. So with that, Anil, what's your thought on that when it comes to the the millennials and their behavior or the objective or requirement perspective?
Suvendu, thanks for this, and I also like to thank Fintech Festival of India for organizing this event and giving us an opportunity to talk about this pretty relevant topic. See, we at Vivifi India, we kind of offer loans primarily to salaried and self-employed individuals. And if I go back and look at our customer base, they're all in the age groups from early 20s to late 30s, maybe early 40s. So if I look at our customer profile, a lot of them are millennials, and they kind of drive the economy, drive the digital economy, let me put it that way, for India. And especially in digital lending, they are the early adopters. They are the customers who are using digital lending options like ourselves or mPokket or Gaurav's, and they definitely, as Irfan said, are a slightly different breed than our earlier generation, like our parents or anyone else, for whom credit was an afterthought. And it was a savings-driven economy. We used to say, like our parents used to save up to buy, but we are living in an instant gratification world with the millennials. They want it now, even if they have the money right now or not. They're willing to access credit and access credit for not just buying a home or buying a car. They're more than happy to access credit to buy a phone. Also, they are not wanting to put or delay their needs. Like if they have a young, I mean, it could be a young family with a young kid, and if they want to take that kid out on a vacation, or if they want to give better education to their children, they are not averse to accepting credit as a means to achieving their goals. And that's, I think, is a big shift that has happened, and that is driving the credit needs. I mean, kind of the digital credit explosion is primarily driven by them. And if you're looking at the millennials, apart from the factors that I've just described, another defining feature for them is their adaptability on digital medium. You said about 400 million millennials. Almost all of them have a phone. Definitely, most of them have a smartphone and are willing to interact for their services, for their for buying stuff, for their financial needs, for their day-to-day communication with their own family. Everything is happening through that medium. So for digital lenders like us, they obviously form the rock bed of our growth strategy.
Quite a few point you brought it up, right? So definitely they're tech savvy, digital native, they're ready to take the risk. The needs are slightly different. Yeah, so I think very interesting points. I like to kind of come back to those points, one by one. But as we move, so Ram, I understand your farm is also to P2P lending, right? So when it comes to the the millennial, coming to the platform and lending money, is there any kind of different behavior you see, than kind of borrowing perspective?
Yeah, so Suvendu, so we are actually we provide the technology platform for most of the banks, fintechs, NBFCs, and one of the platform that we provide is also related to P2P lending. Okay, so which enables players like Paisavasar or even the others in the market who offer P2P products. Okay, so I think which is where we worked with around 200 plus lenders in India. Okay, and then we worked with around 300 plus in globally. So what I would just add to what Anil talked about, right? So first of all, there is a completely a shift in behavior in terms of willingness to take on debt. Okay, I mean, like people used to save, but now today people are willing to spend. Okay, but I think one of the big differences, right? A lot of us look at this as a risk behavior, but I look at it more like a psychological shift in behavior of the confidence. I mean, the young India is so confident about where they are going, where they're going to get to, right? That they're willing to achieve those aspirations much more quicker. So even in terms of whether it's a lending for a commercial, I mean, like a consumer durable purchase, I mean, it could be as small as a phone cover also, right? Or it's for a travel and this thing. So in the same manner, just to add to the part, right? If you look at the amount of investments or the number of people who have been onboarded on a Wazir or a CoinDX and all those platforms, and if you look at the profile of those people, these are all millennials. So they are willing to experiment with the financial products. They are willing to take that risk. So that is where they also are comfortable in investing on a property like a P2P lending, right? Which is not backed by a financial institution. It is about giving money and taking money from your people that you don't know, right? I mean, you have used in colleges or something like that in the good old days. You used to borrow money from your friends. Like towards the end of the month, you're short of it all, right? Now, but here, in the case of the whole part of it, what we see is there is a larger element of a social trust, okay, especially in case of a P2P lending. Whereas when it's institutional lending, you're kind of, you know that it is whether it's a Bajaj or if it's even a Just Money or a Cashy or many of these newer players also, right? There is a trust that's been built. But in a P2P lending scenario, it is about trusting an individual from whom to whom you're giving money. So I think the India is a lot more confident, India is a lot more aspirational, and India is a lot more trusted. Okay. So I think these are the aspects which is a shift in the paradigm.
And Ram, right? So staying on that, right, the behavior aspect of the millennial, right? So one thing, what they are labeled as is like instant gratification, right? So the millennials kind of want to consume today, pay later, right? So they're okay with that, and they want to kind of do it. They're highly ambitious. They have certain passions, certain things to kind of achieve, do, and they want to do it now, right? So they don't want to kind of go for a big job, save money, and then go for a holiday or vacation or buy an expensive phone. They just want to kind of do it now and pay it later. So is that a kind of a, Gaurav, I'm coming to you, right? The point perspective, even related to the trust, right? So the social trust, what Ram brought it up, right? So if you kind of see all of this together, right? So how, what's your take on the millennials' approach towards, borrowing behavior or borrowing, patterns, if anything you see?
Sure. So just to introduce what our firm does, right? I'm the founder and CEO of mPokket. At mPokket, we specifically focus on millennials, and that too the younger segment, even among the millennials. So we lend to college students and to what we call our young working professionals, right? And the previous two panelists, Anil and Ram, made some very relevant points. And those are clearly the trends we are seeing as well. To add, one other big trend that we do see is a demand for convenience. Convenience is a very high priority for the customers that we serve, right? They are almost impatient and demanding in terms of the convenience they want. I think overall, the tech industry has evolved, and now the customer has certain expectations in terms of how things are supposed to work, right? So if someone wants money and it doesn't reach their bank account instantly, thanks to UPI, that is possible. If it lands after a minute, that is considered to be bad.
I think there's an outage.
Gaurav, you there? I think we lost Gaurav. Okay, so yeah, I think maybe we'll wait for Gaurav to join. So I think we'll move forward the discussion. So yeah, so I think what I see about is like definitely the millennials are the risk takers, right? So and they are okay to kind of take this kind of loans for the consumption purposes, right? But how is the risk profile looks like when it comes to a a business model perspective? So Anil, Ram, maybe Irfan, you guys want to kind of speak anything about that? Anil, Ram, yeah.
Yeah.
Yeah, you
You
can
want me
go.
to go first or? Yeah. See, I think somehow there is a perception that a millennial consumer, just because they're young, are a much riskier consumer. Somehow that perception exists. I think Gaurav has come back, but I'll just finish my point. But in reality, a millennial customer, their risk profile, there is a bell curve like any other group. There are good customers, there are less risky customers, there are more risky customers. And as long as you know what are driving the consumer, their intent to repay, their ability to repay, and if you're able to assess those and are able to lend and lend an amount that they can repay and give them flexibility, which is what we focus on. The million consumer, to Gaurav's point, is they want convenience, and convenience comes in many forms. And one of the forms that they look for is they need flexibility, and they don't want to be sometimes tied into the traditional products. They don't want a personal loan, which is even if they want a 5,000 rupee purchase, the banks offer only a 2 lakh rupee personal loan that has to be repaid in 36 months. So they are now using buy now pay later options for buying their products. So and similarly, even a lot of them, some of them do have access to credit cards. Most of them don't. You're talking about 400 million people. Only 55 million Indians have credit cards. So within the millennial population, it's a small fraction that has a credit card, but they want a credit card-like experience. If you look at 60s, 70s America, the growth on which America was built on was consumption-driven economy that was enabled by credit cards. And what we are doing in India right now through the digital lending platforms, players like ourselves and others that Ram mentioned, we're all trying to target the millennials by giving them the flexibility with credit card like products. Because the credit card like products allow you to have small amounts of credit, give the power to repay back into the hands of the consumer. So with FlexPay, a consumer can draw, pay back in a day, pay back in a month, pay back in 2 years. It's at the consumer's choice. And as long as they're able to service and make minimum payments like a credit card environment, that they are able to take access to the credit. And flexibility is an important point. And Ram is very right when he's saying this is an aspirational generation. This is a confident generation of Indians. And if India has to reach its goal of being a $5 trillion economy, it is on the squarely on the shoulders of these on the consumption of these Indians, and it can be only possible by offering them ability to increase their disposable income, and which is offered in terms of credit. And it's all about how you underwrite, how well you can look at data, and I'm sure Ram has a lot to say because they provide a lot of our peers in the industry with a lot of bank data and other data to analyze these consumers, even if they don't have thick credit bureau files. And we use a lot of alternate data to assess these consumers' risk. And if you're able to provide them the flexibility and convenience, this customer group is no different than the customer groups which are older.
Yeah, no. So actually, like you said, right? It's a good, it's a very valid point. And let me also see one of the things what we realize is this group is very aware. So they understand trade scoring, credit score, they understand financial efficiency. A lot of people leverage, right? Instead of, I mean, so they actually split their money into something that they're investing into, and then they're borrowing for short term to pretty much do for cash rotation in terms of capital, right? Where they borrow from a cash flow perspective and rotation perspective, that behavior is now reflecting in the individual consumer behavior also. And it is like the fact is obviously, see, we process around 20 million transactions a month, right, across various financial documents, and a lot of it is a bulk of it is obviously with bank statement. And in many of these customers that we see, the borrowers, right, we clearly see that they have enough capital, right, ability to pay. They could have done the same. Some of the consumption could have been done by just paying out cash. But what they realize is they get a credit for, just like the credit card gives you a 30 days free credit, right? Many of them look at this part as for a slightly longer duration that they're able to get the kind of capital, this thing. Okay. And the other part is, which again is in a way they're doing some kind of a reverse budgeting. Okay. Because let's say you're going to pay a school fee and then you're paying 1.5 lakh or 2 lakhs, right? Now here, you're pretty much you taking a large part of your savings or capital and deploying them, okay, on an expense which does not give you a return. So, but instead of that, what they've done is they've kind of split this into, they take a loan to pay the fee, right? And then they're able to have a longer yield on their 2 lakhs, which is capital, which may be with their accounts in terms of the investment returns which is coming in. At the same time, have the ability to pay the EMI. So, which is the big part of it. And a lot of it, again, like Gaurav talked about it, the experience is really important. So that is where a lot of the data in terms of alternate data being processed, whether it is in terms of the employment records coming from an EPF portal, or it is basically your mobile, also peer comparison, those kind of data coming into play becomes very reflective. And even if you look at the overall trend, right, in terms of the number of people who have been given loan in the last 4 or 5 years, I mean, the number of people who have come under the ambit of credit bureau has significantly increased. Okay. But then if you look at the proportion of customers who have not paid back in time, that is not really gone up. So that is where the notion that a millennial is a risky segment is completely, I think, unfounded. It is about a shift in behavior, and it's a generational shift, and we have to kind of understand that part and make it more convenient for them to grow.
So, Irfan, Gaurav, we lost you. Maybe anything if you want to add, you can finish off your views, thoughts, what you were just sharing before. And I just want to kind of add what reflect on what Anil and Ram mentioned, and just kind of add a bit more to that, and maybe we can discuss that. So, Gaurav, Irfan, you can contribute. So there are like many publications that which it's called out repeatedly. The millennials have issues with the debt, and so is that true? Do you guys feel that there is an issue, challenges, and what is the kind of the method and approach for recovery from the defaulter? So that's something maybe you guys can add it. So Gaurav, I'll go first with you. We lost you last time, so maybe you can go first.
The first point about whether millennials as a group have an issue with debt, I would say I don't think the answer is yes to that, because if you look at the country still, right, I mean the penetration of consumer debt to GDP across any segment is still very low. So I think it's, we definitely cannot claim that millennials are over indebted in India as a whole. Obviously, there will be individuals and maybe certain groups that end up getting over indebted, but as a whole, that is certainly not true. In fact, if anything, we're on the other end of the spectrum where we are actually under indebted compared to, a lot of other countries, developed countries, even other emerging economies, right? As far as recoveries and collections go, I mean, look, as lending grows and as indebtedness grows and the amount of debt grows, recovery and collections is a part of any lender's business, right? I mean, lending as a business is, giving out money, but then also ensuring that it comes back, because otherwise the system is not healthy. And I would say in that context, actually, if you look at the data, Ram alluded to this earlier, even though the number of loans and the number of users who are borrowing has grown dramatically, the percentage of defaulters has not necessarily grown dramatically, right? So just to give you one data point, there was a recent CRIF report that shows that the number of active short-term personal loans, which they define as less than 1 lakh rupees, has grown from 7.5 million in fiscal 19 to about 20 million in fiscal 21, right? So that's in just in 2 years. It's massive growth, right? Almost 3x, 300% growth, 250% growth in 2 years, right? But so obviously when you see an industry that grows so rapidly, the number of people who will be delinquent will go up. I mean, that's natural. But this needs to be looked at as a portfolio, as a percentage, right? And in those terms, actually look at a business like ours, right? I mean, traditionally someone would say, I mean, if you're lending to a segment like college students or to people who are in their first job, who are under 25 years old, that would traditionally be considered to be the most risky segment out there, right? But actually our delinquencies and default rates are not very different from credit cards, right? So I think that demonstrates that again, Anil was mentioning this. It doesn't mean millennials are as a whole not riskier, right? It just depends on, obviously you need to underwrite them collectively correctly, and also the decision on how much to lend is very important, right? I mean, if you end up giving out too much debt to a person and that they cannot handle, and their ability to repay is not there, then that becomes a problem. So I think as lenders, that is the key thing that we all have to look at as we're going after this population, which is what is their ability to take on debt and only lend to.
Completely agree, Gaurav. Right? So the ability to in fact, I was going through some article and kind of I read the statistics, right? So it says that millennials are in fact more conscious about the credit scores. So the credit score concept has got introduced like 10 years back, and they kind of started with it. And the statistics says around like 54% of the millennial, kind of check their credit scores, CIBIL scores versus 14%. And they do understand that it's very important to kind of build a credit score, because a lot of lending, future lending will be related to that. So Irfan, anything you would like to kind of add on this topic?
Yeah, sure. I just wanted to take a step back and then add to this. So what is this buy now pay later, or consume now and then pay later concept? There were traditional lenders also who were sitting in dealerships, who were sitting in say Vijay sales, and then selling TV and then offering credit, right? There were customers then also who were offered credit, and then subsequently there was consumption lending, and then. But then what has changed significantly is, I think, and I'll jump on to convenience, flexible products, which is I am not sitting in the dealership and then selling. The app, say Amazon or something, is also pushing the credit right and then and there, right? Then the product, most important piece that they talked about is convenience, product flexibility, most important, and it has implications on the repayment behaviors also. What I mean is, not everything should be a term lending. That's what we are used to. Probably if you go back to a generation back, it is all term lending. I'm not talking about corporate finance, etc., wherein there is working capital, cash, credit, etc. It is largely term lending, and then credit cards. Flexibility was significantly missing. Take a two-wheeler loan, take a TV, fridge, consumer durable loan. It is all term lending, 24 months, 12 months, 18 months. But then now we have gotten into or brought in the flexibility into this. We are talking about digital cards also. The experience, aspiration is different, but otherwise, it is what Anil talked about. The product offers a significant amount of flexibility. That is one. So it's we should realize that it is still lending, and with lot of flexibility. Most importantly, significant amount of data points to be able to underwrite, so that we are not going wrong. At the end of the day, this is a business of risk. We should not understand. We should not misunderstand that it is. This is business of lending. Lending is business of risk,
yes.
Right? So you have to do your customer selection well, underwriting well. Gaurav also pointed out to quantum of how much to lend, and subsequently collections. So no doubt about it, with the customer education awareness going significantly up, today we are talking about a 21-year-old who is far more aware of what are the implications of taking credit and then paying or not paying about it, right? And there is so much of campaigning and then education awareness that is also going on. So there is no doubt that we'll have to be, you know, taking care of customer protection, the fair practices, also, you know, kind of lending and collection practices that we, you know, to go, because we are in the business of, again, you know, risk taking. So those pieces, you know, there are organizations like FACE, you know, and then responsible lending organizations who are you know, following such and such practices, which are setting up the standards, right? So the perception, I completely agree to all the panelists, you know, perception is one, and the way we have gone about, you know, building the industry and then capturing the probably the opportunity, you know, is also, you know, very much there. Third point that I want to make is this is, you know, when we talk about, you know, lending to be able to, if in case of a business we are talking about, you know, future cash flows and all that. Here we are talking about a consumption lending, which is like a consumption smoothing also. If you are talking about, you know, Ram talked about, you know, we used to take loan and then, you know, probably pay it. It's more like consumption smoothing. I don't have money now, but I'll have later, I'll, you know, get it. It's not too far into the game where, you know, talking about future cash flows, future, you know, expected cash flows coming in for the business and everything. So the moment you separate these two also, you are very much there, and then clubbing in the 3 points that I mentioned, you know, I think this is a great opportunity from the lender's perspective, and I'm also talking about lenders to, you know, institutional lenders to, you know, entities like Flex and you know, mPokket also. So from that perspective also, if I can add, there is a huge, not everyone can do, you know, what say Anil is doing and then Gaurav is doing. So there is a synergy that is also brought up to be able to capture that kind of opportunity. So we are I actually thought I will add these points to the discussions.
Thank you. I think very good points, Irfan, right? So the flexibility is definitely a kind of a big aspect what the millennials are saying, right? So it's not that one size fits all, right? So they definitely kind of have different needs for different purpose, all of that. So coming back to you, Gaurav, right? Do you see the millennials have a unique consumption basket, and when it comes to the, you know, borrowing money per se, is there a kind of a particular basket where the millennials are more focused on from the need perspective?
I would not say there's a particular basket, because we've seen among our customers, you know, various use cases for the funds that they borrow, right? So when we look at their spending patterns, some of it is purchases, right? Like some of the panelists previously mentioned. I mean, even small ticket purchases, you're buying something on Amazon, and maybe you're part funding it, right? So maybe you're buying something worth 5,000, you have 3,000 on you, you want to take a 2,000 rupee loan because you know that money will come to you 2 weeks from now, you just don't have it today. Then there are, I mean, increasingly travel is a big use case, right? I mean, train tickets, you know, even taxi fares, right? I mean, those can also add up, kind of population that we are servicing. But otherwise, again, to answer your question, there's no one particular basket. But what is important is that people are, you know, as Ram and Anil also mentioned, people are increasingly borrowing for small things that previously, I mean, in previous generations, that was not common. I mean, previously, if you want to take a vacation, you would normally not take a loan for that, right? That would not be considered prudent. So I think that kind of behavior change is something that we definitely see.
I think, you know, quite a few points, right? We collected. Definitely the millennials' behavior are different from the earlier generations, and you know, they need flexibility, convenience, you know, speed, you know, digital experience. So with all this, right, keeping in this in mind, how the, you know, fintech models are evolving or evolved in last couple of years, as well as the digital platform. So Ram, maybe you know, if you can add some views, thoughts on this.
I think obviously in the last several years, right, 5-6 years, the model has evolved a lot. I mean, interestingly, it started with solving for small businesses. Okay. I mean, the earliest fintechs that when I know we started working in 2014 started with solving for small businesses, kirana store, or even a small business, right? Who wanted a short-term cash flow. Okay. And then obviously move to consumer. We see these two tracks are moving in parallel, and some interesting products came out, like as simple as this payday loan. The fact that someone spends his salary or he's out of cash by 25th of the month, and he wants to take a loan for 7 days. He knows his salary will come on the third of the month. He can pay it back. That came in, right? And the whole part of your consumption was basically line of credit products, which was in terms of the business were given line of credit. No one thought considered the fact that I can give a line of credit to the retailer or a consumer, right? Someone it's a limit of 30,000, but they use only 5,000. Then they might use another 6,000. Okay, right? So which is again, see the whole notion of the fintechs have brought about that whole notion of convenience, easy access, okay, great experience, and flexibility. I mean, I think what Anil talked about, Irfan talked about, right? Flexibility in the commercial engagement. And to a large extent, this is also the shared economy behavior, right? I mean, people, I mean, obviously, before the pandemic, Uber and Ola were the most preferred choice of transportation, right? You wanted to go and stay somewhere, you did not think about a hotel, you thought about an Airbnb, okay, or a Oyo kind of share this thing to stay, right? So that's also part of it. So which is where, or even the fact is insurance with Acco, right, gives you insurance only for a trip, okay. So those are the behaviors. That is where it is that instead of creating products that are long engaging, right, because again this is it is it is very specific, it is for a purpose, it is for a short duration, and it is to meet their requirement. So that is the big shift which I see in the models. And obviously the latest one is buy now, pay later. But even the fact that you also see new banks who are coming into play, right? Who are saying that I can give you the flexibility of your moving your deposits, right? I mean, from one bank to another bank or even a commercial deposit part of it. So those are all the shifts which fintechs are bringing in terms of the financial products that are being offered to both consumers and businesses.
To kind of add something from the technology perspective, how has evolved. In fact, there is a viewer question as well. Is the technology helps the lending to scale? How can technology help in recovery? Any thoughts you have on that?
Sorry, is this
See,
question to me?
sorry, who is this addressed to?
Okay, I think we have some challenges. So Ram, I think either Ram, Irfan, anyone want to kind of take that up? How the technology landscape has evolved, and as lending scales with technology, how can technology help in recovery?
Sure, let me just state short.
Please go
Yeah.
ahead.
See, first of all, if you see this one, it's an engagement model, right? It is not anymore a one-time this thing. I just take a loan and I go away, right? Most of the platforms, whether it is on Anil's Vivifi platform or even the Gaurav's thing or even the other players, right? It is a customer engagement. So they actually come and use it for multiple times. From that perspective, digital device becomes a very good mechanism to get a lot of information. Okay. Obviously with consent and all those things. So which means that you know what is the behavior, even after a loan's been taken, there's a purpose. If someone is basically splurging the money on something else, that becomes a mechanism to say that there's potential risk, right? Or even the fact is, I know like recently there's been a lot of money payment investments which are going towards some of the new financial products, right? Whether it is your Bitcoin kind of thing or NFTs and all those things, right? Some people think of it as a risk. Some people think of it as an investment with a higher return. Now, depending on your appetite for risk as a lender, you can take these kind of information to understand. So, which means what technology is done is one is there is continuous stream of information. It is not discrete. It's not discrete anymore, right? The second is there is a lot more engagement, which is real time. So, which means this part, and then you also get other mechanisms of identifying behavioral patterns or even social patterns to see that accessibility becomes much more better. So for like as simple as this, you know that the best time to reach a consumer is at, let's say, 8 p.m. on a WhatsApp, right? Versus reaching him probably on a SMS, okay, at this point of time. And so those are things which is where technology is able to reach customer through multiple elements.
You want to add to that?
From our perspective, when I see collections or recovery, significant development already in the space. We have so many payment gateways infra that is already a part of the fintech ecosystem that is propelling. And then very important point Ram made, which is an engagement mode. So I mean, the mode that we have already seeing is, you start with a smaller tenor and then graduate it to a longer tenor and then larger ticket size. So how is this? This is only because of recovery and then the patterns beyond collection and payment cycles that are captured in a traditional lending. Fintech is able to capture much more information, and then the evolution of the payment payment ecosystem significantly has helped. Already. I think. I mean, quick 2 points from my side because running off time.
Yeah, so we're top of the hour. I think it is, I'm again very glad to be part of this, and it is very interesting and engaging discussion. So thank you to all the panelists over here. So with this, I'll pass it on to Amit. Amit, over to you.
Thank you. Thank you very much, and thank you for this wonderful and insightful session, everybody.
5 मिनट में अकाउंट सेटअप और ट्रेडिंग शुरू।
हाँ कर सकते हैं।
नहीं कर सकते।
लगी शर्त और हारा तो It's possible with CoinSwitch Kuber. Download करो और Bitcoin trading start करो. CoinSwitch Kuber. सिक्का चमकेगा.
Cryptocurrency is an unregulated digital asset, not a legal tender and subject to market risks and price fluctuation risks.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC.